Good afternoon, everyone. I think those who want to go for the catch up the lunch and then come back, please do so. And those who want to be just part of the understanding that how do we build the modern journeys, happy to converse with you. So I'll just get started. I know it's a very tough time to have the sessions in between the lunch core time, but I'll try to do the justice of those who are going to stay back, right? So I'm not gonna, I think we've already spoken about who we are. I'll just directly come to our sessions. But again, those who doesn't know, we are primarily a consulting firm. We are homegrown consulting firm. We work with the largest bank and NBFCs in their entire the digital transformation, risk and compliance advisory, including the DPDPA. So we work. So we'll just get started. Primarily during the session, what we try to cover, that how do you build that entire the scalable and customer-centric journeys, right? That's critical. And what are the challenges and the opportunity that you can have, right? And I'm going to talk about across, since morning we have been talking about that how the different learning journeys can be built, right? So if you look at it, I think it's got to be cliche, right? We talk continuously since morning. We have already been talking about that how the entire the digital transformation is taking shape in the country, right? Be it on the rapid digitization, shaping the entire BFSI, digital public infrastructure taking place, right? So lots of the development has already happened. And if you look at it, just look at the transition that how the entire the journeys has taken in the BFSI, right? And I'm just trying to generally be it on the deposit side of the journeys or you talk about it in the lending side of the journeys, right? So if you look at the early 2000 and 2005, it was primarily channels, right? You have the mobile internet banking, and it was primarily designed for the servicing part of it, right? No journeys, no fulfillment process per se, right? Then I think 2007, very interesting, iPhone got launched and right, entire the mobility world had changed, right? So that was a pretty, the major change which took place. And then the mobile apps started getting built around the banking infrastructure, right? The banks, NBFCs, and primarily started launching the app. Again, it was largely being driven for the servicing part of it, right? It was still not for the acquisition. It was still not built for the journeys to take place, right? And I think 2013 to 17, it was primarily omni-channel, digital-only banks that started taking place. Banks have started building their own digital platforms, and there that primarily the acquisition also started taking place, right? And when you start about acquisition, early days it was primarily taking the lead and then primarily telling the branch guys to start converting those things, but building the process. But still, there was a handshake between the mobile app and the human, right? But I think then subsequently, if you look at it, the evolution of the digital public infrastructure, which allowed the KYC be to done, right, just by pulling the APIs, and that solved lots of the problem in terms of the journeys fulfillment part of it, if you look at it, and especially more on the deposits, like, and then subsequently that all the evolution in the 22-24 video KYC guidelines coming in place, and that's a start solving some part of the portion for the journeys, right? So if you try to look at it and try to plot the different banking products on the scale of the maturity on the digitization and end-to-end fulfillment, when you look at the end-to-end, that when customers apply and be it on the new-to-bank customers or be it on the existing customer, right? And that's where probably you start seeing the difference between the product to product. And the major, if you look at it, I think high maturity case, saving accounts, largely most of the bank has sorted out that how the entire journeys can be completed, be it on the KYC, deduplications, right? So those are the aspects has been taken, and then including the collecting the money for the account opening and all this thing, that has been done. Or now also, if you look at it in the personal loan side of also, not for all the entire the individual category, but in terms of the few segment customers, like for example, good employment record, good credit history, and all these things. You can see the personal loan journey has been also been completely resized. And in fact, in the panel also we were hearing that almost 10 to 15 minutes you get able to do the journeys, right? So I think personal loan, credit card, and some of this term deposit, FDs, and all these things, like. Now, you know, the FDs are not only the bank platforms, but you can go to the non-banking platforms like Money Control, and also then you can book an FD, right? It's just a quick and 10 minutes process that you complete the video KYC and all this thing, you open the deposits, right? And I think the second part is that where that some of the products, some of the evolution is still now taking place, right? Some part of the work has happened, like especially if you look at the current account, your home loan, loan against properties, right? It's not completely been digitized, right? But it still is a part of the process. Journey has been digitized, be it on the onboarding part, if you look at it, be it on the some part of the underwriting, but it's still some of the inherent component with respect to product, like say current account, or where that you have to assess the business viability part of it, and as well as primarily on the home loan, the property, legal and technicals that you need to close it out. So that's some of the evolving maturity. And on the bottom of the tire, if you look at it from the product perspective, the low maturity where that the entire the trade finance, the supply chain finance, lots of the work is happening, but still in terms of that we try to look at as compared to personal loan or the credit card, I think it's a lot of work to be done, right? So that's where that I think working capital, the corporate loans are still, these are largely still not been completely digitized. Now, if you look at the entire spectrum of the journeys, right, you will have multiple dimensions. Now, the journey itself will start varying. So when you are building the journeys, you need to be cognizant of that where the customer is coming, what kind of the customer it is, right? New to bank customer, existing to bank customer, right? Pre-approved journey. These are like primarily where, like say NTB, you know that it's going to be the first time that customer is coming. You still need to validate the deduplication. You need to do the KYC, right? And then subsequently go on to the building the journeys. And again, product variations, right? And then ETB, right? ETB is a very different, like since once you have done the dedupe, you can pull out the history and then you can take the other product journeys part of it, right? So that's where again ETB plays a good role. And the pre-approved journeys, right? Especially in the loan cases, if you look at it, the customer is having a credit card or customer is having a saving account with the bank, and bank has done the analysis and now the customer has been given a pre-approved. Still, lots of the automation can be done and then journeys get completed, right? So that's pre-approved. And also it's varied on the partner channel side, right? From which channel the customer is coming. Like say if you look at it, it's still on the web, if the customer is coming, you may still have some kind of the manual interventions taking place. While on the mobile app, the customer is coming, you can leverage lots more on the data points like locations, right? The device security and all this thing, and which allows you to build the journeys accordingly. Like mobile, it's good to build your self-services journeys, right? That's where. Now, then maybe assisted journey, sales guys is there on the along with the customers, and then now you are trying to build the fulfillment journey part of it. There is very interesting, like be it on other side also, if you look at it, now the transition is taking place where the banks, NBFC is partnering pretty well with the LSP partner or say fintech partner, and the customer acquisition is happening on the partner end. Now from the partner, the journeys are getting initiated, right? And then you need to make out the point that the entire the journey gets completed. So that's the big shift is taking place. And I think if you look at it, the whole life cycle of the journeys, and that's where that it's pretty critical to understand that it goes through first on onboarding, and I think most of you are aware. I'll try to spend more time. What do you need to focus on when you're building the journeys, right? So it's onboarding, you need to take care of the activation and funding. Again, it's lead to the primarily saving account journeys or the deposit side of the journeys, right? Then for the loan and all this thing, underwriting and all that goes through that, right? And the engagement and the usage, servicing and support, right? So this is typically in a life cycle. And the segment-led journeys, right? Retail, you will have a very different journey. So individuals, you know that what are the things that need to be checked. It's more like in a straight line. You will have the variations, right? So for example, person having a good credit history and person not having a good credit history. So both has a treatment will be different, right? But it's still, again, is a straight line kind of the method where that you need to do the KYC and you do the underwriting. But when it comes to SME and MSME, things start varying a lot, right? Because there that you primarily start seeing that is a sole proprietor, is a partnership, is a public limited, right? Those are the variations start coming into the picture. And again, all kind of the variability in terms of the which segment the customer is there, what kind of the business that he is doing. So those are the typical challenges when start coming in the building that the complete digital journey for the onboarding for this kind of the customers, right? So how do you go about building that entire the seamless and scalable customer-centric journeys, right? That's where primarily focus. So typically there are 5 phases that you need to be very careful about it, and definitely you need to go by the product to product. That treatment will differ, right? So you start with the discovery where the customer get identified, right? Okay, this is a customer where that I need to complete the fulfillment process, like end to end. Then you try to do the conversion, right? Customer came, he searched for that product, he explored. And now you're looking at the conversion, right? So how does from the touch point to the completely taking him on board up for that particular product, right? And then having an engagement phase, and then subsequently once the customer is engaging, now you move into the growth, your scale, sell more product, as well as that get into the retention loop, right? Because ultimately it's very critical. In today's competition, it's still very challenging that customer dropouts, right? So when you're into the discovery stage, it's very critical that customers is aware, right? What kind of value proposition that you are building. The customer, if comes to the mobile bank, first thing first is try to look at what are the features are there, and it depends, differ to product. Like credit card, definitely you will try to look at what are the rewards are there in the product, right? If the saving account, what are the benefits that I have? So you need to make sure that as soon as the customer lands on your platforms, he is aware of all the value propositions, right? And what are the things that he is trying to evaluate? What are the things he is trying to consider as a part of the buying process? So that's where the discovery phase comes into the picture. Then now comes the conversion, right? Because there the chances are that people start dropping it. But once a customer has made a decision that he liked the product, he liked the value proposition, and he's ready to proceed. So there and now your journey need to be very intuitive so that customer is continuously engaged. Moment and a drop will happen, it will have a challenge, right? So typically you will look at that, how you engage with him, like can you get some of the pre-filled data? Because the moment the journey is cumbersome, right? And customer has to go through the multiple fields, multiple clicks, customer starts dropping in, right? So it is very important that you look at that, how many clicks are there, how many data fields are there, and how many data fields getting populated. Then entire the onboarding process, the verifications, the APIs are there. Lots of mechanism is there where that you can verify this information, right? And then go into the activations, like customers, again, very critical, that once a customer has completed the journey, he immediately like to activate, he immediately want to start using it, right? It can't happen that you approve a credit card and tell him that, okay, after 1 week, that customer, that he will receive the credit card and then only he can use the credit card. Can you make that credit card digitally, virtually available so that at least he can start the credit card on the e-commerce platforms rather than waiting the customer for the cards, right? So that's where you need to look at that, how quickly you can activate or saving account. The moment he gets that completed the process, the money should get into the account details comes into that, he gets the mobile banking activation, and then he can start using that saving account. So that's where you need to, conversion phase, you need to be very careful that how you're building that entire the process from the, okay. Now this is very critical engagement, and that's typically, if you look at it more, loan, if the loan has been given, then typically it's a very straight line that customer will use for certain purpose. And then you need to figure it out for what purpose that customer has taken the loan. But more for the other product, lifestyle product like credit card, or say for example, saving accounts, or say for example, in the case of the business, if he has applied for the cash credit or the working capital kind of the loan, has he started using it? Because unless until he start using it and he uses it, definitely chances are that it may go stale, right? And suddenly the account may go into the dormant stage, right? So that's where you need to have all the effort, continuously monitoring. Like, so for example, today, how many of you have been using the credit line on UPI? How many of you have got it? किसी ने apply किया credit line on UPI? Very few. So now you can go and apply that case, certain kind of the credit limit you can get, right? And you can use the credit line to make the UPI payments. Now many of the banks, since we are working, I was seeing that people have been getting the credit limit, but they are not using it, right? Because it's lying as another credit card. But how do you engage? How do you motivate the customer to use the transaction? Because unless until customers start using that credit line facility, you are not going to make the money. Otherwise, it will be loss-making kind of the product. So that's where you need to start focusing that how to entice, how do you continuously nudge on the channels with some offers or some kind of the rewards mechanism that you start using it. So that's also a critical part of your journeys, right? You can't just leave it at the time of activation for the customers, right? And then provide all the kind of the support and engagement, right? So let's say, for example, customer has taken issues, any product, and you can't have a mechanism that if he gets into problem, let's say, for example, if it's a credit card, he has to call the call center. You can't have that kind of a structure laid into that product journeys. You need to have a mechanism where the customer has consumed that product. There itself, there has to be some mechanism that he can raise a concern, he can get some kind of the solution there itself rather than calling the call center, right? So that's there, and then this is critical, growth. So that's where that I think morning we are using a lots of the AI, that's definitely going to play a larger role. Because customer is doing once the customer is using, he's generating a financial behavior for that particular product with you, right? And can you consume that data to make him do more, right? So one of the critical factor for analysis is the number of products per customers, right? So this is critical, like average good banks who has been building a good product portfolio, typically you will have the 2.5 to 3.5 product per customers, right? And some of the laggards on the space, they will have only the 1 product or 1.5 product per customers, right? So these are some of these KPIs that you need to look into that when you are trying to build a kind of a growth phase, right? Cross-sell. And retention, you need to definitely reward him, like if he's a long customers, maybe then in terms of the lending product, can you provide him some of these interest benefits, point basis points and all. So these are there, and then also taking care of the churn and the drop off, right? Now still some of the challenges, right? So some of these challenges, typically it will come, and that's you can monitor in terms of the KPIs, right? And challenges or opportunity, I'll put it in the same way, right? A drop off recovery and preventions, right? Now this is very critical. As talking about that discovery to conversion, you need to be very careful about that how many people came to your mobile banking and applied for a product, or they gone to your website, and how many has started journey, how many got dropped off. Video KYC is typically one of the case where we have seen that good amount of the drop off happens, because you give an option to the customer to either complete the journeys or the video KYC stage, or schedule a particular time where that he can do the video KYC. Now during the process, chances are very high the customer drops off, right? Video KYC journeys, if it's not a very smooth journeys, right? Very interesting assessment that we were doing, and we could figure it out that at the selfie stage also lots of the drop off happen. And you know the reason, typically people have just woken up, or he is not in a good state and all these things, and suddenly comes the selfie. People drop off the cases because they may not look good on the selfie screens. So these are some of the things that you need to analyze. So drop off and prevention, that how you're going to do that. I think customer acquisition cost, that's very critical factor that you need to be very careful when you are building on journeys, be it on the loan side of it, be it on the products side. And if you have the technology also, like for example, end-to-end digital, take care, look at that, what is the human intervention, and human cost also need to be get added into the factor, right? So that's where that you need to assess that what is the total cost of acquisition, how you can bring out that cost of acquisition, because then only you can pass on the benefits, especially on the lending product and all these things. If you look at the home loan journeys that we were talking about on the medial level of the maturity, if you look at the challenges there where the sales process cost get added, the legal cost get added, the valuation cost get added and all these things, and this cost is getting passed on to the customers. So if you are able to optimize the cost, CAC for those kind of the customers, you can easily pass on the benefits and it helps you, right? So that's where the entire journey is part. Channel consistency, handover, like channels also, you need to continuously monitor that all the products are available on the channels, right? Is that complete end-to-end fulfillment part is there available on the channels? Friction reduction in UX, and this is critical, right? You need to be very careful that how many clicks, again, be very clear that how many clicks that you can avoid, how many data fields that you can avoid. I'm not talking about that without losing out the regulatory requirements and the compliance, right? And now added with a DPDPA where that you will have to build a consent layer, which may be definitely adding and more clicks, right? Because now you will have to change the consent for each of the data collection separately and mapping with the property. So how you going to manage that entire the customer experience, again, taking care of the regulatory requirement, but optimize the number of clicks, optimize the number of the frictions, right? Then some of the challenge, again, from the friction to fulfillment, right, or from the challenges to opportunities, again, through some of these KPIs can be managed, like turnaround time. So look at that, how many minutes or the days that you can make the customer apply to get the journey getting completed, right? So that's very critical, right? TAT becomes very critical. Many of the customer has been dropping because of the TAT issues, right? And typically, again, it's varied from the organization to the product, right? Then cross-sell and upsell enablement, the data analytics, how much try to optimize the use of the data, right? That's again very critical, right? I'm not sure. Yes, it will be visible. So some of the best practices, if you look at the use cross-functional teams, right? The customer journeys, typically, if you look at the challenges have been that even with the customer journeys, lots of the teams get involved, right? So for example, if the credit card journeys, if you look at it, even it's a completely digital, you will have the sales team getting involved, you will have operations team getting involved, you will have the credit team getting involved, right? So those are challenge. Still, everybody may be operating as a silos, right? Okay, so you will have the siloed approach like fragmented experience, right? So hands-off not taking place appropriately. Credit to once the credit approval happen and then to the operation doesn't have the availability access to all the information is available. So those are the typical challenges you will have, right? And that's where you need to figure it out the entire journey, that how do you ensure that the journeys when you are building the cross-functional experiences have been taken care of it. Right, taking inputs from the operations, taking input from, like say typically operation, what are the checklists that he takes care of it, right? What are the things that before dispersal that those pointers that need to be checked, right? So you can't sitting in the one corner and build the complete product journeys. Credit, what are the data points? What are the variations that he needs to take care of it? For those variations, what are the different data that you need to make it available, right? So those are the things that you need to make sure that that the journeys has been built. Build the best journeys on the real customer data, right? Again, it's very critical. Data points are available. In the previous sessions also, we've been discussing about that almost 40 APIs are available, right? And more than 40 APIs in any journeys, right? How do you going to make the better use of the data, right? Let's say, for example, GST data. Now, the GST data can be heavily been used to do a much better underwriting process, because through the GST, you can figure it out what kind of the sales that customer is doing, what kind of the business that customer is doing. Those all aspects can be taken. Try to map emotions alongside of the actions, right? So typically customers, what are the customers' anxiety level will be there when he's coming to the journeys? Again, it clicks that how intuitive the journey is there. Sorry? Okay, so map emotions, like for example, again, you will find it that when the customer is going through that kind of the screen flow, some of the journeys you will find it, like especially the millennials, if you look at it, they have a less attention span, right? So in that kind of the situation, you will typically find it a challenge. Rishi, you may get the speaker, I'll manage, right? Okay, so in that case, you need to be very careful. What are the customer experience going to be there? How the customer is going to assess when you are completing the journeys part of it, and then update the journeys map as a living assets, right? It's like he needs to get a feel that, okay, there is a human angle involved to that. So there is someone is guiding. Like, for example, that's why we take that case. As soon as the customer is moving from screen to screen, is there a kind of the nudging available? Is there a kind of the clarification point is available? Is there a kind of the information available that how many steps that he has completed, how many steps that he has? Because many times he may not have the idea that, okay, how many screens more? Right? How many data fields that more he needs to follow? These are the small practices, right? But still, it can help a lot more when you are building the journeys. And I think AI definitely is adding a lot more. I think since morning we have been, each of the sessions we are finding it out that every speakers, every leader is emphasizing a lot on the use of the AI, right? And that I think in the journeys, in the building the business case also is a very critical, right? So be it on the using the behavioral analytics, right? So how customer is behaving on the screen, right? What are the challenges he may be finding, that you can use lots of the AI. And maybe if in case the bots is available, then you can use that. So some of the behavioral analytics can be used. Then contextual nudges, right? Let's say, for example, customer is coming based on the spending patterns, right? So, for example, since he is on the mobile, he has been using the consuming like the credit card or say any other products. You may be knowing that what kind of spending that he is doing. Can you use those spending patterns and create a kind of the products? Or maybe a statement, looking at the statement itself, that you may be able to figure it out that what kind of the products can be given, right? So that's where that you can do that. Fraud prevention, I think this is definitely a kind of the fraud prevention. Lots of the AI can be used. Another classic case, if you look at it, where let's say, for example, customer is typically does the transaction through his mobile banking from typically at home, right? and suddenly and from the Mumbai, and suddenly you find that there is a different pattern that customer is doing at the very odd hours of the transactions that he is doing. Okay, and not through the mobile, typically is doing from the web, right? So there is an unusual behavior. So can you use that unusual behavior to figure it out? It could be the fraud. Or say, for example, he did the transaction using the mobile banking from city Mumbai, and suddenly there is a card transactions which is showing at the location as the Delhi, right? So that's a typical challenge, right? So these are the data points that can be used for the fraud prevention, right? Conversational banking, I think previous to previous session we heard a lot about the voice bots getting used for the collections and including the sales prompt also, right? So that's typically that can be used where that you start calling the customers, and typically if you look at it, the voice bots, conversational AI has evolved a pretty big way. I think they can really talk in a human language, in any vernacular language. That's the kind of the conversation can happen. I think this is also very critical that how the partnership is evolving. How the partnership, because if you look at it, lots of the journeys, because in the age of the, digital lending, if you look at it, or the embedded finance, lots of the things, the journey acquisition is happening on the third-party interfaces, right? So let's say, for example, today, if you look at it, how many of you are aware that on the Money Control app, which is on a non-financial, is a news content, market content provider, you can go and apply for the personal loan. You can get a personal loan on the Money Control app, or you can get a book an FD, right? So these are kind of the scenarios, like if you are the e-commerce platforms and you're trying to buy on a phone, you can apply for the loan on the real-time basis, right? And then get the funding for your mobile phone purchase. So entire that partnership ecosystem is evolving, where that it's helping the customer to get acquired on the different platforms, and definitely there is a bankers or there is a lender in the back end, right? Okay, so but at the time when you are building the journeys, the customer need to have the complete clarity that, okay, this lending product that he's buying or he's purchasing is very clearly coming from which lender, right? So if it's a, say for example, loan he is coming, so he knows that which NBFC is behind the loan. And in fact, digital lending guidelines, the RBI is completely pushing for that, right? So that's why you need to be very careful about that digital lending. So all the partnership that you are working it out, you need to be very careful. So and all the compliance and all these things can be done. So I think typically just the one slide. So typically why we also work a lot into that area, helping with the banks and NBFCs in the transforming that end of the journeys, be it on the building an approach for the cloud first, use of the AI into the whole of the journeys, open banking, and also helping them on the personalizations as well as on the secure by design, right? So that's where the digital journeys in BFSI is getting built.